Hello traders, Gary Wagner here, just about 10:10 in Honolulu, 4:10 in New York. It is Wednesday, last day of August, August 31st, 2016, and this is the Daily Report for Gold and Silver. We have a mixed bag in the precious metals markets, with gold, platinum, and palladium trading lower on the day, silver trading a touch higher on the day. First to gold. 1311.70, that is December COMEX contract, trading off about $4.90. Let's round it up to $5. Low on the day has been 1307, and the high on the day has been 1319. When we take a look at spot gold, 1308.42, off about $2 on the day, low 1304.38, and the high 1316.13. Now, as I said, silver is trading just a touch higher on the day. As you can see, currently trading up about 7-8 cents at 18.64, with a low of 18.55 and a high of 18.86 on the day. So traders, here we are, end of the trading month. Market under pressure again today. Specifically, I'm talking about gold, of course. And we are at an interesting crossroads in the market. As I said yesterday, there's a couple of different models that I am looking at. But in essence, I'm holding some weight to the fact that we have probably completed some sort of a minor third, this being a wave 1, which occurred end of last year, beginning of this year, our wave 2, and then our wave 3, which concluded with a truncated fifth. Now, there is another count which still shows us in wave 3, and time permitting, we'll take a look at that today. If not, we'll certainly take a look at that tomorrow. But either way, whether I'm labeling us still in this wave 3 or having concluded this wave 3, we know that this most recent sell-off from this area of about 1377 to these lows that we hit today, which were around 1306, is absolutely some sort of a correction within the market. Now, what I find interesting and why I think we're at a crossroads is I've created one fib retracement, which starts at roughly 1199, goes up to 1376, and then I've plotted various retracement points. 38% retracement, that is 1308. And then our 61% retracement, that comes in at 1266. Now, why do I think this is such a key and critical area? Well, partially because if, in fact, the market can find some sort of support here at 1308 and we see some sort of a bounce, then what we might be looking at is some sort of an A, a B, and then a final C, either being a flat or a final C, taking us to about 1266. But the key with this, traders, the key with this is that this is a critical area that needs to be held, because my sense is, and of course this is on a technical basis, if we cannot see the market hold this particular area, really, again, on a technical basis, we have really nowhere to go except either the 50, which is a rare occurrence, but probably the 61% retracement at 1266. So this is the area we really need to watch and see what occurs over the next couple of weeks. Traders, silver is trading higher on the day. As I said, up about 8 cents, and we're also at a very critical area. We talked about this a little bit over the last couple of weeks, but when we look at silver, we know that it hit this absolute bottom just as gold did end of last year, beginning of this year. With silver, we traded all the way down below $14. $13.66 is where I've got our bottoms pegged at. Now, interestingly enough, and I'm going to need to compress this actually a little bit more than it is so you can see the defined tops that come in the market. And there we go. I've got a defined top, and you can see where the fib retracement comes in. It comes in from the most recent high, or highest high, I should say. Now, this, of course, occurred last year, about a year ago, actually, August through September, when we look at where it actually comes in at. And then we saw the market really at the beginning of August through September literally fall out of bed, first trading to this low of about $15, coming back up to about $18.50, finally settling down to these lows, and this is those lows at the end of last year, beginning of this year. And so that's where we're getting our fib retracement from. And then traders, I have a secondary fib retracement. This spanning a little bit more space and time, comes down to these lows. And interestingly enough, the 61% retracement of this fib retracement here is 61%. And this particular market, 1850, is also a 61% retracement, but it is a retracement of our shorter retracement starting up here at 2150 going down to the bottom before we actually see it plot back up. So we have some kind of interesting numbers in that this 61 matches up to this record high here. The next high before the drop, so to speak, the 61% retracement matches up to 1850, call it, if we round it off. And so it is a critically important area in terms of whether or not this market holds this particular level of 1850, because if it does, it signals that really on a technical basis, this market is probably going to come back up and make a play for at least $20 per ounce. But let's see if it holds in this area, because I believe we have a little bit lower to go in gold, but both gold and silver are at an area where we could absolutely see some sort of an upside bounce. We'll have patience. We're flat these markets right now. I want to make sure that our next trade is a sword to the heart, so to speak, that it's effective and extremely profitable. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.